Here's a hard truth that lingers behind every trading screen, one that few say out loud, but many quietly feel every day. You're not stuck in a cycle of repeating mistakes because you lack intelligence. It's not because you fail to understand the market's ups and downs, or because you aren't determined, focused, or resilient enough. The real reason lies in our biology. Your mind is wired to protect you from pain, even though facing that discomfort is often the key to real growth. We all know that familiar promise: this time, it'll be different. But sooner or later, that pledge fades away, and you slip back into old habits. It's not because you don't know what you should do. The real challenge is this: knowing what's right and actually doing it come from two different places inside of you. Logic sits in one corner, emotion in another. And more often than not, it's emotion that's calling the shots. Think about those moments after a tough trade, when you shut down your screens and swear, that will never happen again. Yet the cycle repeats. The next morning arrives, and you catch yourself making the same choices once more. If any of this sounds familiar, you're not alone in this struggle. But here's what really stings deep down. You saw the warning signs as they popped up. You felt that mistake coming. You could sense it building, even get a knot in your stomach. Yet you still walked right into it, almost as if you were under a spell. But it's not magic. It's just how our brains are wired. Picture a scene that just about every trader knows. Before dawn, a trader sits in silence, surrounded by their preparations. Their strategy is clear and ready, carefully written down. The trading journal is open, and their rules are set in stone. They make a promise to take action only when every condition matches their plan. Then, the market stirs. Suddenly, a price bar shoots up with dramatic force. It almost seems to beckon him closer. He knows this isn't his ideal setup. He remembers, all too well, how this very move unraveled him before. Still, his hand inches toward the mouse. His pulse quickens. That sly inner voice sneaks in. What if this time is different? What if this is the opportunity you've been waiting for? In that critical moment, he's not negotiating with market conditions anymore. He's wrestling with his own emotions. And when emotion steps into the ring with logic, you know who comes out swinging. Why does this happen? Evolution has shaped our minds to help us survive, not to help us trade. Our primal instincts push us toward instant relief and away from discomfort, especially when that discomfort drags on. But trading asks for the opposite. It requires patience. It asks you to accept small losses, to stay calm in uncertainty, and to face discomfort without flinching. That struggle you feel in your mind, you're really fighting against centuries of hardwired behavior. It's a hidden trap, almost invisible, until you fall right into it. When you look at the charts, everything comes down to two powerful forces in your mind: impulse and identity. Impulse is that urgent, emotional voice, the one that hates waiting, craves instant rewards, and panics the moment prices move. It's the part of you that pushes to close positions too early, to hold on to losing trades for too long, or to walk away from winners before they've run their course. Impulse makes you chase losses, trying desperately to win back what's gone, fueling reckless trades born from frustration. It's a relentless force in your mind, loud, persuasive, and incredibly hard to ignore. On the other hand, identity is that still, steady presence within you. It's the voice that longs for consistency, the one that remembers your principles and recognizes when something doesn't fit your criteria. It calmly warns you to stay disciplined, gently nudging you to follow your plan, and reminding you exactly where impulsive choices will lead. But here's the catch, a truth that most people miss: your mind defaults to the voice it hears most often, not always the wisest voice. For many traders, impulse feels like an old companion, shaped by years of responding to emotions long before trading platforms even existed. Emotional habits run deep, formed and reinforced over years. At the same time, your identity as a disciplined trader, your values, ideals, and self-control is still developing. That's why cycles of repeated mistakes aren't simply technical errors, they're challenges that come from how your brain is wired. Psychology offers an important insight here. In 2012, researchers studied how people tried to change their habits, whether in trading, daily routines, or life in general. They found a striking pattern: even when someone fully understood that certain actions would harm them, they often fell back into old habits anyway. The emotional bond to those habits outweighs even your best intentions. That's just how the mind works. It clings to what feels familiar, confusing comfort with real safety, even when that comfort comes with a price. So take a moment to think: if breaking your own trading rules feels riskier than taking a loss, what does that reveal about your habits? It tells you this: your comfort zone isn't discipline. It's impulsiveness. Losing trades, split-second reactions, and hope-fueled choices, these are what your mind knows best. Patience, self-control, and sticking to your plan are still outsiders, waiting for a place in your thinking. If you find yourself repeating the same mistakes, it doesn't mean you can't learn. It simply means your brain hasn't fully accepted the new identity you're striving for. You're aiming to become a disciplined trader, but you might still approach the markets with habits formed by your past patterns. As we move forward, ask yourself this: do fear, uncertainty, or the urge to overtrade still influence the way you trade? The truth is, poor trading results rarely come from flawed strategies. More often, it's psychological pitfalls that cause most traders to stumble. That's exactly why I created my ebook, Master Your Mind, Master Your Trades. It's an actionable guide designed to help you control your emotions, follow your rules, and trade with confidence. If you're truly ready to transform your trading mindset, you'll find a link to the ebook in the description and the pinned comment. Now, let's keep moving forward. Here's a tough truth: your brain will often protect your pride before it protects the growth of your trading account. This is why you move your stop loss, why you freeze instead of cutting a loser, why you leap into half-baked trade setups, chase runaway prices, or struggle just to wait. Your mind is trying to protect you from feeling wrong, even if that means blocking the progress that only comes with temporary discomfort. That's why traders can have detailed plans, yet abandon every rule the moment real money is at stake. The mind might understand the strategy, but it's emotion that calls the shots. Information lives in your thoughts, but fear is buried deep within your body, and your physical reactions always move faster than logic. That's why your muscles tense up before you click buy on a risky trade, or why a sudden surge in a price chart narrows your focus, pushing reason aside. In those moments, you're not following a plan, you're acting on instinct and stress. So why do you keep making the same mistakes over and over? It's because your nervous system is conditioned to handle pressure in the same way it always has. Imagine this: a trader takes a small, reasonable loss early in the day. According to his plan, it's supposed to be no big deal. But emotionally, it hits much harder than he expected. There's an inner voice whispering, you have to recover that loss. And in that moment, the psychological trap springs shut. His mindset flips instantly from careful calculation to a frantic chase for redemption. Suddenly, the whole market seems full of opportunities. Every little dip tempts him as the perfect entry. Every price movement calls out, urging him to erase the sting of loss. Within minutes, he finds himself making a flurry of trades, 4 impulsive bets, all driven by a desperate need to escape discomfort, not by rational analysis. Here's the pattern: you make a rash move, feel regret, promise yourself you'll do better, but then find yourself caught in the same emotional storm again. The cycle keeps turning, not because the market changed, but because your old internal script stayed the same. The real mistake wasn't with the chart setup, it was in your habitual responses, hardwired into your brain. Here's a powerful truth: it's not the market that tricks you into repeating these errors. It's your own mind. The market doesn't break your discipline, your emotions do. The market never triggers your fear and greed. It's your personal conditioning that pulls the strings. Repeating mistakes isn't a sign that you don't care. Instead, it means that emotional patterns are in control. You keep falling into the same traps because your emotions jump ahead of your logic. Changing this doesn't just happen by noticing what you're doing wrong. Awareness by itself only shows you where the problems are. It won't stop you from making the same mistakes again. What really makes a difference is interruption. It's a conscious pause, a moment when you intentionally disrupt your own patterns. Just a brief bit of mindfulness is all it takes to catch yourself before your instincts take over. The real problem isn't just repetition, it's mindless repetition. Running on autopilot is what keeps you stuck. Every serious trader knows the feeling, that lonely, sobering moment in front of the charts, asking yourself, why do I keep making the same mistakes? Why do good setups fall apart in my own hands? How can I know so much, yet still act against my own best interest? The root cause isn't self-sabotage, it's self-preservation. Your mind tries to protect you from discomfort. But the truth is, lasting success lies on the other side of that discomfort. If you want to grow, you have to lean into it. That's where true consistency is found. Until your brain truly understands that feeling uneasy isn't the same as being in danger, you'll keep falling into the same traps no matter how sharp or educated you are. If these words sting, that's intentional. Pain often means you're starting to see things clearly. Recognizing this loop is the first and most important step to breaking free from it. This is why patterns tend to persist. You're trying to outsmart the market with clever strategies, but when it comes to your own mind, you're not bringing any tools to the table. Every trader knows the strange tension of staring at a setup they swore they'd avoid and realizing just how hard it is to break the cycle. The warning signs are flashing. You know this trade doesn't fit your plan. You know entering now is reckless, but somehow awareness alone isn't enough to stop you. Your hand moves toward that button almost as if someone else is in control. You watch yourself cross the line you promised never to break. When that impulsive trade falls apart, you find yourself repeating the same familiar words: I knew better. I should have stayed away. Why can't I stop myself? Every trader faces this question at some point. It lingers, casting doubt on your confidence, making you wonder about your own judgment, or even if you truly belong in the trading world. Even if you can read the charts with expert precision, it might still feel like you are the problem. But the truth is more complicated. What appears to be a lack of self-control is often caused by deeper, hidden patterns at work. Your mistakes don't happen by accident. Powerful forces within your mind influence your actions, sometimes before you're even aware of them. Unless you recognize and understand these underlying forces, you'll keep getting trapped in the same harmful cycles no matter how skilled you are. In the end, trading is about more than just reading charts. This is about mastering the silent battles that happen inside your own head. Most of the time, these reflexes kick in before your conscious mind even has a chance to catch up. It's as if your brain is running silent scripts, automatic responses written over years, shaped by your fears, desires, memories, basic survival instincts, emotions, and deeply ingrained habits from the past. These scripts spring to life in an instant: a sudden flicker in a price chart, a wave of FOMO, a flash of doubt, a glimpse of potential gain, or the sting of a small loss. Any of these can set those scripts in motion. Let's take a closer look at how this plays out. Picture a trader starting his day calm and determined to follow his strategy. But before diving into the charts, he checks his account balance, a simple, harmless habit. Yet this small moment sets off a chain reaction. If the number disappoints, self-doubt creeps in. If he notices his equity is down, even slightly, the pressure to perform mounts. And if he's close to reaching a trading challenge limit, a quiet fear begins to grow. Most of the time, he doesn't even realize this shift, but already his emotions are in control. The markets haven't even been analyzed, yet something within him has changed. This internal shift quietly shapes everything that comes next. He draws a resistance or support level, but does it more quickly than usual. As he reviews the price action, he feels a flicker of impatience. When a possible setup appears, his instincts urge him to act before waiting for confirmation. A rush of excitement floods in, overwhelming his logic. Almost without realizing it, he enters a trade that's less than ideal, one he would have dismissed on any other day. Mistakes in trading rarely begin at the moment of execution. They're born from silent, emotional ripples that influence each decision, long before the final click. What causes these repeated mistakes? The answer is simple. Emotions fire off quickly, much faster than logical thinking can catch up. Emotions spark in your brain just milliseconds before logic has a chance to respond. That means you lose control of the situation before you even notice the first trigger. Bad trades don't happen because you want to fail. They happen because your instincts react before you're aware of it. Let's dig a little deeper. Inside your mind, there's something called emotional momentum. It works much like price momentum in the market. Just like a stock in motion tends to stay in motion, emotions that are set on a path gain momentum as well. A flicker of frustration can quickly turn into impatience. That impatience leads to impulsive decisions. Before you know it, impulsiveness opens the door to overtrading. Then comes regret, which can quickly spiral into revenge trading. And suddenly, you find yourself in an emotional freefall. Think back to your worst days trading. It's rarely just a single mistake. More often, you get caught in a relentless chain of errors, each one linked to the last. At the very beginning, there's almost always a subtle emotional disturbance, something so minor you might barely notice it. Maybe you overslept, maybe you saw a trade you missed, or heard a friend boasting about their latest win. Perhaps there was tension at home, or you simply felt worn out and under pressure. Each of these small triggers quietly fuels your emotions. As this momentum builds, it starts to guide your choices, almost invisible in the background. But there's another powerful force at play: dopamine. Many people think it's greed that leads traders astray, but the real driver is actually a neurochemical: dopamine. Dopamine fuels anticipation. Your brain doesn't reward you with this chemical when you actually score a win. It releases it when you sense that a win is just within reach. That's why, even when you know better, your finger still hovers over the buy button, tempted by weak opportunities. Your mind isn't chasing logic, it's hooked on the thrill of possibility. The excitement you feel watching a huge price candle is the same rush gamblers crave at a slot machine. You might think you're chasing profit, but deep down, your brain is addicted to the rush of dopamine. That's what drives you to chase after breakouts. It's the force that urges you to jump in too soon. It's why you stray from your trading rules and why you keep hitting the buy or sell button even after you promised yourself you'd stop. The real battle isn't with the market. It's a fight against your own biochemistry. And beneath it all, there's an ancient survival mechanism still active in the oldest parts of your brain. Its only purpose is to protect you from harm, but it can't tell the difference between a bad trade and a real threat. It doesn't care about technical patterns, and it doesn't understand risk management. It simply reacts to signals of danger and distress. So when you're facing the chance of a loss, this system snaps into action. Your pulse races, tunnel vision takes over, rational thought fades away. Suddenly, every decision is clouded by fear. This hardwired instinct is the reason you nudge your stop-loss again, even though you promised yourself you wouldn't. It's the same instinct that makes you want to exit a position too soon, even when you know patience would be smarter. It's why you feel the urge to bail out during a typical pullback, no matter how solid your analysis is. Many traders blame themselves for lacking willpower, but in truth, humans are wired to avoid discomfort. Even a small loss triggers the brain to see danger, making your body shift into survival mode. When this defense system takes over, rational thinking fades and instinct takes the wheel. In the end, instinct always outruns strategy. Next, there's the lasting power of memory. Our minds tend to hold on to emotional experiences much longer than logical ones. For example, if you've ever been caught in a painful stop-out during a false breakout, that sting can stick with you. Or if you ignored your trading plan but still made a profit, the excitement from that win can leave its own mark. These emotional memories quietly shape how you trade. You might start to mistrust certain setups, even if they're statistically sound, or you could find yourself drawn to patterns that only worked once. Sometimes, you may even put too much confidence in trades that aren't really reliable. Emotional memory acts like an internal compass. It guides you toward what to avoid and what to pursue even when those instincts go against your real interests. But there's another layer that can make things even more complicated, an identity clash. Deep down, you want to act like a seasoned pro. You wish you could move through the markets with the confidence and steadiness of an experienced trader. You want to follow your own rules. But beneath it all, your true self may still be shaped by an old story, maybe the version of you that couldn't wait, the one filled with nervous energy, or the one always seeking instant gratification. Maybe your inner dialogue belongs to someone who can't sit still, or maybe it's the seeker inside, always chasing the next thrill. In the end, your choices reveal your true identity, not just the image you want others to see. If any part of you still sees yourself as someone who struggles, you'll act in ways that fit that story, even if you have a well-crafted trading plan. There's also another hidden dynamic at play: emotional forecasting. This is when your feelings, not logic, start predicting market behavior. You feel anxious, so you expect a sudden reversal, or a burst of excitement convinces you the move will keep going. Pressure can trick you into thinking you're falling behind. Hesitation makes you feel the situation can't be trusted, but neither response comes from true, clear-eyed analysis. These reactions actually arise from emotions, disguised as logic. Then there's the crushing burden of performance pressure. The more you crave a win, the more it feels like you absolutely can't afford a loss. That longing turns every decision into a heavy one. The weight of pressure can cause you to break your own rules. It speeds up your actions, urges you to take trades you would normally avoid, tempts you to exit too soon, or throws your judgment off balance. Under this kind of stress, even the slightest movement on a chart can feel urgent, a looming risk or a fleeting reward. Suddenly, every trade seems connected to your self-worth. When these emotions take over, you're no longer truly trading, you're just reacting. That's why old mistakes keep resurfacing. These hidden forces influence every decision you make. Reminders to stay disciplined lose their strength against a wave of instinct. Even the best-laid plans can collapse under the fast, unpredictable grip of impulse. You might remind yourself that you understand how all of this works, but knowing the facts isn't enough to break the chains of habit. That's why you often feel split, like you're two different traders. There's the calm, methodical side that shows up when the markets are steady, And then there's the impulsive, emotional side that takes over when real money is at stake. The gap between these two versions of you is shaped by the powerful emotions swirling in your mind. The moment you see a candle flicker, emotions switch on in an instant. The sight of profits triggers a rush of dopamine, and just as quickly, a sudden pullback sparks a surge of fear. A missed trade brings on a wave of stress, the familiar feeling of missing out. When these emotions kick in together, your actions often turn automatic. That's why, even when you know what you should do, you find yourself making the same costly mistakes. It's why, despite having a flawless strategy, you might end up sabotaging trades that should have been winners. It's why you carefully track your errors in a journal, yet continue to repeat them. It's why your promises to change sometimes crumble under the weight of old habits. Remember, your setbacks aren't about a lack of willpower. The real reason, emotions move faster than reason every single time. Unless you learn to interrupt that emotional surge before it takes over your decisions, you'll find yourself repeating the same mistakes no matter how good your intentions are or how much you've learned. For every trader, there's a pivotal moment. At this point, the problem isn't knowledge. You've watched all the tutorials, studied the textbooks, created a plan, and put it into action. Maybe you've even experienced brief moments of consistency. And yet those familiar traps keep snapping shut, time and time again. Sometimes it feels like you're trapped in a maze inside your own mind. You know exactly where the exit is, but somehow you keep ending up back at the beginning. You tell yourself what you should do, but your actions don't match your intentions. Whenever you slip, you ask yourself in frustration, I knew what I was supposed to do, so why didn't I do it? Facing this tough truth can be discouraging, but in reality, it's the first real step toward transformation. The real change happens when you understand that knowledge alone just isn't enough. That's the moment you finally realize what trading truly demands from you. Trading isn't about gathering more information, chasing the latest indicator, or searching for a secret setup. What truly matters is having control over your emotions. And emotional control isn't something you get just from reading about it. It's built over time through self-awareness, consistent practice, and intentionally reshaping how you think. Your mind needs to be retrained to move past old habits, not just to recognize them. The real reason most traders struggle, they try to fix their mistakes purely with logic. They tell themselves, stop overtrading, stop moving your stops, stop risking too much. But reason by itself often isn't enough. But when adrenaline is pumping, telling yourself what you should do hardly matters. Should simply fades in the face of fear. It cannot answer the urge that shouts, enter now, or you'll miss your chance. Should can't calm the fear that flares up when a trade goes the wrong way. It won't silence the desperate need for a quick win. The only way to break free from these repeated mistakes is to truly understand the emotional forces pulling you back toward them. Once you grasp these forces, your job is to reshape your instinctive responses from deep within. Without this inner rewiring, knowledge alone will never protect you from falling back into old patterns. One of the most powerful, yet often overlooked forces is something called emotional inertia. This is the stubborn urge to react the way you always have. If your instincts have trained you to avoid losses above all else, you'll probably find yourself bailing out early, again and again. If you're wired to chase every exciting opportunity, you'll keep jumping into trades before the setup is truly ready. And if your mind is consumed by the fear of missing out, you'll continue taking trades, even on days when the signals just aren't clear. These cycles don't just disappear because you read a trading book or watched a motivational video. They're deeply etched into your nervous system, built from hundreds of emotion-charged moments. Over time, your brain has turned these reactions into familiar pathways, shortcuts it takes almost automatically. These mental shortcuts run on autopilot unless you consciously step in to break the cycle. Most traders don't even realize these habits have taken over until the effects are impossible to ignore, usually only after a mistake. Think back to the last time you overtraded. You didn't plan this out. You didn't make your choice with intention. Instead, there was just a subtle urge, a surge of restless energy, almost like an itch you couldn't ignore. That pressure bubbled up inside, and before you had a chance to think, your finger was already clicking. When the trade was finished, you stared at the screen, surprised at your own speed. But really, it wasn't speed at all. It was pure instinct. Emotion had taken the wheel in an instant, leaving logic far behind, barely even a whisper of warning. And there's another force at play, too. It's your emotional investment in the outcome that keeps drawing you back to the same mistakes. When hope or need ties your sense of self to a trade, your decisions stop following your well-planned strategy. Instead, they start chasing your emotions. You find yourself guided by a deep sense of need rather than your plan. This kind of emotional craving is dangerous. It tempts you to interfere with your trades, to act on impulse, to relax your stops when things aren't going well, to hang on to losing positions too long, or to grab profits the moment they appear. You begin to think that if you just do something, if you just press the buttons, you might be able to force the market to move your way. But the market doesn't care about what you need. Its loyalty lies only with structure and timing, not your desires. Yet your emotions are quick to react, stirring up a storm inside you. This clash is at the heart of your struggle. When a trade matters too much, every price move feels intense. One tick can seem like a warning or a promise. Your emotions are already fired up at the thought of winning or losing, even before the perfect trade setup appears. These early reactions over and over lead you back to the same old mistakes, and there's another quiet opponent: emotional memory. Whether you realize it or not, your mind carries the shadows of every tough trading experience you've lived through. Remember waiting patiently for confirmation, only to see the opportunity slip away? Or those days when you followed your plan perfectly, yet still fell short? Think about the times you hesitated, only to watch the market surge without you. Or those moments when you sized your position just right, but a sudden price spike took you out. All of these moments leave a mark. They shape how you react every time you trade. More often than not, you're not just responding to the chart in front of you, you're reacting to echoes of past emotions. Entering a trade too early often comes from the fear of missing out once again. Closing a position too soon is an attempt to avoid the pain of a sudden reversal you've experienced before. Increasing your risk? That tends to happen when you're trying to recover past losses quickly, hoping for a fast comeback. Over and over, it's your past emotional pain guiding your actions, causing the same mistakes to play out in your choices today. There's another trap that many traders fall into: the illusion of confidence. It's easy to confuse a calm mind with true fearlessness, but real confidence isn't the absence of doubt. Real confidence means seeing your fear for what it truly is, and choosing not to let it guide your choices. But often traders confuse sudden bursts of excitement with real confidence, especially when the market is full of energy. That buzz can feel powerful and almost empowering. But remember, excitement is just another emotion pretending to be certainty, and it can easily lure you into making rash decisions. That's why making a bold move like jumping into a trend right after a big price surge might seem smart in the moment. In reality, what you're feeling is a rush of dopamine, clouding your judgment and making it harder to spot the risks. There's another powerful force behind repeated setbacks: self-protection. Many traders don't sabotage their own progress because of carelessness. Instead, their actions are driven by an unconscious need to protect themselves from emotional pain. For example, closing a trade too early isn't always about lacking discipline. It's often about protecting your feelings. The urge to grab profits before they disappear isn't careless. It comes from a deep-seated fear of watching your gains slip away. In the same way, holding on to losing trades is another form of emotional shielding. Accepting a loss can feel like admitting defeat, so it's natural to hesitate before closing that position. You find yourself waiting, hoping things will turn around, even as you ignore clear signals from your own trading plan. This isn't foolishness, it's self-sabotage. It's your mind's way of protecting your emotions, dressed up to look like rational decisions. You can't break this cycle until you discover the specific fear you're avoiding. There's also something called emotional identity bias. The way you see yourself, often hidden deep inside, has a powerful impact on how you act in the market. If you truly believe you always face an uphill battle, you'll subconsciously behave in ways that keep the struggle going. If you see yourself as someone who can't stick to discipline, your mind will constantly find ways to undermine your self-control. If you believe you're destined for bad luck, your thoughts will search for proof that supports this idea. The way you perceive yourself influences every decision you make. Until your core identity truly changes, any shift in behavior will be short-lived. That's why some traders manage streaks of almost perfect discipline, only to fall back into old habits. Their actions changed for a while, but deep down, their self-image never did. Inevitably, our actions fall back in line with who we believe we are, deep down. To truly break free from repeating the same mistakes, you need more than just discipline. You need to develop emotional awareness, a skill that lets you notice your feelings without being driven by them. This is the real foundation of greatness in trading. It gives you the strength to handle the frustration of waiting and still hold your ground. It helps you manage the tension during a market pullback while staying true to your strategy. It lets the urge to chase a trade flow over you, but keeps you calm and patient on the sidelines. Real mastery isn't about eliminating your emotions, it's about understanding them. True skill is making the right choice, even when emotions are running high. If you find the same mistake popping up again and again, it doesn't mean you're a failure. It's a message, a sign that there's still a powerful emotion driving that behavior. Your real challenge isn't just to force yourself to stop. Instead, aim to uncover and understand the emotion at the root. When you address the underlying feeling, those unwanted patterns will begin to fade. But if you focus only on fighting the behavior and ignore what's going on beneath the surface, that cycle will always find its way back into your trading. The breakthrough happens when you start to notice those emotional triggers before they take over. You catch yourself in the moment, choosing to pause instead of reacting. You take a breath rather than speeding up. You decide to wait instead of forcing a trade. You let the urge surface, but then you let it pass, resisting the temptation to let it control your decisions. Suddenly, the market picture sharpens, opportunities become clearer, the wild uncertainty fades, and you stop fighting against yourself. The chart becomes just the chart again, and you're making choices, free from emotional turmoil. The reason old mistakes have haunted your trading for so long is simple. You've been fighting the wrong enemy. Instead of dealing with the emotions beneath your actions, you tried to control the actions themselves. But once you recognize that deeper force at play, everything starts to shift. You realize your mistakes weren't signs of weakness. They simply marked moments when emotions took over before you could consciously respond, moments when your mind needed more strength and resilience. Seen this way, mistakes aren't proof of failure. They're reminders that there's still a lesson waiting for you. And when you truly take that lesson to heart, not just understand it in your mind, those old mistakes start to lose their grip. They simply fade away.